At this point, we're taking a closer look at the Central Bank of Nigeria's move to impose stricter limits on government borrowing through the Ways and Means facility. Nigerian businesses and citizens are bracing for significant economic changes or challenges. Now, while the CBN's decision is aimed at controlling inflation, it would also create budgetary constraints, higher taxes in some cases, which have ripple effects throughout the economy, as it's been touted. Now, as the government seeks to navigate these fiscal challenges, we will be asking one of the questions, of course, which has to do with: will this policy bring the economic stability it promises, or will businesses and consumers face new pressures? So I'll be discussing this particular issue, looking at the implications for small and medium-sized enterprises, consumer spending and public programs, including strategies and probably solutions, with my guest who's right here in the studio, Bunmi Bailey, Head of Research, SBM Intelligence. Bunmi, it's nice to have you around.
Thank you for having me.
Yeah, you're welcome. So looking at these policy shifts by the Central Bank of Nigeria, are we looking at a new era of fiscal discipline, or there's a possibility that this might actually falter under political pressures?
Okay, before I can dive into financial discipline aspect, let's actually look at one of the approaches they are using, which is the Ways and Means Advances approach. So first of all, let me explain what the Ways and Means Advances mean. So it's actually, in a way, they are short-term funds or more or less emergency loan facilities by the CBN that they actually use to fund government in terms of, let's say, emergency budget shortfalls, like you explained earlier. And that advances is actually subjected to limit by law. So according to the CBN Act, it states that actually the advance limit should not go beyond 5% of the projected, of the actual revenue of last year. But we've seen in the previous government, as the Emefiele-led CBN, they've actually gone beyond that limit, which has actually, in a way, increased money supply, and it has actually fueled inflation. So going back to the aspect of financial discipline, so when there's if the CBN decides to, if the CBN sticks to this 5% limit, the government would have, they might actually just be judicious in how they actually use the resources, meaning that they would actually look for those areas where those funds can actually spur economic growth and development.
Okay, so I'll just pick it from two sides now. The first has to do with what I'm picking from what you're saying. We are looking at the Central Bank of Nigeria that has regulations guiding operations around ways and means, and this same Apex Bank violated these regulations under the past administration. Now, in a situation whereby we've seen impunity or excesses on the part of the Apex Bank, are there regulations that can or should checkmate the same Apex Bank, more or less like, maybe you have flouted a rule and you should get axed or should get flagged? I mean, that should come into play.
Yes, but like I said, by law, they are actually meant to maintain that limit. In the previous administration, the former CBN governor, Emefiele, like I said, actually went above that limit and nothing was done. But now, well, I believe that if they're actually, like you actually pointed out, they're actually maybe in terms of punishment in place, they can actually help.
Yeah, all right, so let's look at, what these monies are being used for, both at the federal level, and I know that even state governments to also try accessing this. But then, in terms of what they use these monies for, how would you describe it in terms of areas where they expend these monies for infrastructural development, maybe for sectoral growth, maybe, understanding the monies that they get in terms of ways and means and where it is being expended? I'd like you to share your idea on that, if it has actually had any meaningful impact, so to speak.
Okay, well, I've not really, this year, with the CBN has not really give any fund to the government through Ways and Means. We've not seen anything yet, right? So what I can suggest is that like I actually pointed out about how they should usually use those funds in areas, right? So right now, the government is actually trying to, introduce some reforms into the tax system. They are trying to focus more on SMEs, trying to look at those sectors that, they can actually push that money in. So if they actually identify that aspect, that can actually go a long way.
Okay, so how will this now affect the long-term financial sustainability and economic growth of government?
Okay, so like I said, if the CBN sticks to that 5% limit, they are in a way going to control money supply. And when you control money supply, you also control money in circulation. I think around August, money supply was around roughly 107 trillion naira, as at August. Then compared to about, let's say, 62 trillion in the previous, that's August of last year. So you can actually see that huge spike. So when they're able to still stick to this limit, they will be able to, number one, they will be able to reduce, by controlling money supply, they're able to reduce inflation. And when they reduce inflation, they're able to maintain price stability. If you recall, one of the major aims, one of the aims of the CBN is to actually ensure price stability. Because when there's a bit of stability in the market, it actually leads to certainty. When there's uncertainty, it spurs foreign investment, and infrastructure growth, which actually has a triple effect on economic development. Mm-hmm. Another area where if inflation reduces, let me just recall that inflation declined for the second straight month in August, so about 2.19%. So, but it's still the highest in the world. Yeah, there's still a lot of work to be done. So when you reduce inflation, that says a lot for the purchasing power. I mean, the purchasing power of consumers will improve. When there's an improvement in purchasing power, that will actually spur demand. And when you spur demand, that's actually as an improvement on economic activities. And by economic activities, it leads to economic growth. And if economic growth is sustained, it leads to development. So in a way, it's actually a win-win for them. The government has they actually have a target to achieve a $1 trillion economy by 2023. So if by sticking to this, they will actually achieve that.
Okay, but then in all of this, there's still the worry around higher taxes. And a couple of people within the business ecosystem are wondering or thinking probably might lead to job losses. Businesses might have to struggle. Are you concerned about this too?
Well, right now, the current administration, with what we've seen, they are not really keen on increasing taxes yet. What they are trying to do is introduce reforms into the tax system. I mean, increasing taxes right now is going to be like, it's going to shut down a lot of businesses. I mean, businesses are actually struggling right now just to stay afloat. There's actually, they're actually going through a lot right now. So increasing taxes is not the way to raise revenues right now. So some of the reform that it actually introduced, I think the Presidential Committee on Fiscal Policy and Reform introduced some, I think that was last month, tax holidays, just to, in a way,
cushion
the effects. And they're also trying to reduce the multiple taxation among the small businesses. I recall SBM did a report in 2021 where we actually identified, the report is called Informal Taxation in the, Taxation in the Informal Economy, sorry. So we discovered that across we actually picked some key states, and we actually discovered that most of the businesses, like across traders, let's say market women, bus drivers, they were paying like different types of taxes, and that was actually hurting their revenues. So right now, businesses are not really generating, most businesses are not really generating enough revenue. So increasing taxes is not the solution now. So the solution right now is what they are trying to do is to just bring in some reforms, just to cushion the effect of the inflationary pressures that's hurting businesses.
Okay, so while we are still going through that and hoping that businesses and people can benefit from these various reforms of government, what about these businesses themselves? Are there strategies you feel they can employ to help them stay competitive before we start beginning to reap the dividends of the projected plan of government?
Okay, well, I can think of 3 areas. One area I can point out is if you're a business owner, right, just look at a segment or an area in your chain. Find out where you're actually generating a lot of revenue and focus on that aspect. And try to think of an innovative way to actually boost revenue in that aspect. Apart from that, getting loans is one aspect. I mean, we know right now getting loans from commercial banks is very high, high interest rates. Yeah, so what you can do is actually look for those banks that actually give loans at low interest rates. For example, you have the Bank of Industry, you have the Bank of Agriculture. Look at that. And one more aspect that I can think of is the aspect of cost. Try to streamline your costs. You know, for example, if you are noticing that different segments of your businesses, they are consuming a lot of cost, right? Okay, just remove the some that are not really needed or necessary and focus on the ones that are actually less cost incentives.
But do you think they will be able to access these kind of loans from these regional banks? Just about 30 seconds. You talked about African Development Bank, you know, all the banks in Africa, so to speak, as regards having to approach domestic banks. So do you think businesses would have that leverage to gain access to these banks for funds?
Yeah, they will. I mean, recently in the news, we had the Bank of Industry actually get out some loans to the banks. So I think, yes, they'll be able to access it. Okay.
All right, so we are going to be talking more about this, definitely. But then I have my colleague, that is Perpetua Fasomi Peters. Of course, she's in Addis Ababa covering a major event that has to do with African monetary and economic sovereignty conference and to be going on in Addis Ababa in Ethiopia. She'll be giving us a lowdown of what the discussions have been so far with policymakers, economists, and everybody within the business stakeholder as regards how to drive the continent forward in terms of its economic plan and trajectory. Perpetua Fasomi Peter, good morning to you. How are you doing? So if you can hear me, can just go ahead and give us a lowdown of what the discussions have been so far.
All right, thank you, Lekan, for that. Well, basically, I'm here in Addis Ababa at the African Union Conference Center, and we are having the third AMIS conference. Basically, the theme is leveraging multipolarity economic options for Africa. And what we're talking about is that there is the need for, to decentralize decision-making. There is the need to probably put powers in the hands of so many people. And that, of course, involves having Africa to be able to also make decisions that will, in turn, make the lives of its citizens better. And so for us to do that, one of the things we're looking at is the challenge, especially when it comes to illicit financial flows. That's a challenge in Africa. And the question is, where is this money going to? And then you probably want to see that the global south, we have these monies moving from the global south to the global north. And the question is, while it's okay to say we need to stop the movement of these illicit financial flows, we also need to talk about the fact that there are some persons who are recipients of those flows, and these flows are probably developing their own places, and we need to tell them to take responsibility and also find a way of stopping those flows from coming into their climes. That's one of the things we're looking at. And when we're talking about illicit financial flows, there are some causes that we know. I mean, this happens in different ways, whether it's in the area of commodities that are being smuggled and outrightly stolen, or we also have a situation where we are underreporting the invoice of exported products and over-invoicing, the invoice for imported products. These are some of the ways by which we're seeing these things happen. Even in the financial system, that's another way where we're seeing these illicit financial flows happening. And what happens is that when all of this is happening, we're seeing the underdevelopment of Africa. And that's something we really need to deal with. Talking about Africa, we know some of the issues that characterize, or some of the issues you want to talk about when you're talking about Africa. Talk about debt. And then when we also look at the illicit financial flows, we're talking $80 billion being lost annually. That's a lot of money that would work, for other things. And then apart from that, we also have the issue of poverty. And then take away poverty, you also have a situation where Africa is rich with mineral resources, but is unable to add value to it. So at the end of the day, Africa has the resources, Africa supplies the resources, but does not necessarily have impact on how these resources will be sold or the amount at which these resources will be sold. These are some of the issues we're seeing, and these are some of the things we see limiting Africa from having that power to make the decision that will empower its people.
Quite well. Of course, the things you've said right now as regards the focus of discussions going down there. But I'd like to pick on the issue around multipolarity approach when it comes to economic growth and having a whole lot of people come on board to make decisions that can drive economic growth for the African continent. Now, don't you think that will actually slow down the process of decision making? Because, of course, when you have probably a constituted set of people make decisions, make it faster than having to have multiple stakes give opinion when there are challenges inhibiting the growth of the African continent. Hello, Perpetua, can you hear me? Okay, well, I guess Perpetua can't hear me.
All right, I'm not sure I can hear you clearly, but if what you're saying is, how are we sure that this is not another talk shop, one of those conversations we have and maybe solutions that are being preferred towards addressing these issues? I like to say that, I mean, from what you read during the introduction, one of the organizers of this event is CODA. And CODA, of course, is an arm of the African Union. And so if we're looking at a situation where African Union and AFTA are also supposed to be at the forefront of implementing some of these policies that will help reshape Africa and put Africa where it has to be, then I believe that we should not be too much worried, or we shouldn't be too worried, beg your pardon, about implementing some of those things, because we have the authority of the African Union with us right here. And apart from that, some of the things we also need to do to move Africa forward is to boost trade. And that's what AFTA is actually supposed to solve. But we need to do much more than just having these agreements, much more than just talking about those things, but beginning to ensure that we deal with barriers to trade. Whether they are tariff or non-tariff barriers to trade, we need to begin to deal with it. And there is no way you talk about trade without talking about movement of people. But the situation where Africans cannot even move freely within Africa, that tells you that there's a lot to be done. So those are some of the things, I mean, during the conversation, those were some of the things they talked about, how that they are going to ensure that, policies that will help drive those growth are put in place. And apart from that, you also want to look at the issue of the dearth of infrastructure. I mean, you're talking about commerce, you're talking about movement, you're talking about trade, then you need to talk about, logistics, and that's something we also need to, address here in Africa. Talk about whether it is by land or by water, or even if it is trains. All of those things, we need to address these issues so that things can actually be better. Trade can become better in Africa, and Africa can actually have the power to also make its own decisions, decide its own terms. And that was actually one of the key points that was mentioned by the former Prime Minister of Sudan during his opening statement. He said Africans need to begin to actually make policies. They have to ensure that they are at the forefront of policy making. And now let's get to, the green transition. There is also the need to ensure that this transition is just, because it's very important for Africa to be at the forefront of that and also to add value. These are some of the things we're looking at, and some of the conversations we've had here today, talking about how to actually ensure that Africa it's not just, it's not just about giving Africa the power just to ensure that, maybe we're meeting a quota, we're ensuring that we have 1 or 2%, representing Africa. But no, but that Africa is actually going to drive growth. Africa is actually going to make decisions that will force the world to recognize it and know that Africa is ready for change. Another thing that was also mentioned during the course of the conversations today is the need for education. The need to ensure free education up to at least secondary school level across board in Africa. These are some of the things that were mentioned today regarding how to ensure that Africa has that power to make that decision, and Africa has to stop allowing itself to be handed down rules and regulations, but also take charge and ensure that it makes the rules.
All right, thank you so much, Perpetua Fasami-Peters. A whole lot of things you've actually shared with us as regards the conference going on in Addis Ababa, Ethiopia. Definitely we'll still connect with you and get more details from you in terms of the trajectory. I'm looking at the policies and the implementation, because, of course, we can have beautiful ideas on paper, but when it comes to implementation, it could be a very, very big challenge. And we hope that with this particular conference, we would have leaders of thoughts come together to actually, channel a way to implement policies that can actually drive the growth needed for, of course, the improvement of the various sectors of the African continent. Thank you so much, Perpetua. Definitely we're connecting with you some other time. So yes, we're back in the studio anyway, and you're watching Business Edge on New Central Television. We have been looking at a whole lot of things as far as business, not only in Nigeria, but of course in Africa. And now we just go back to our talk with my guest, that is Bunmi Bailey, head of research, SBM Intelligence. But then, before I ask you another question as regards Nigeria, because we'll be talking about the ways and means and what it means, well, what it means for Nigeria and economy. We'll be looking at some other areas and we do a wrap on that. So we get to go on a break right now. So when we return, we'll wrap up on this particular discussion. Just stay with us. All right, you're watching Business Edge, and we have been, of course, talking about at this time the borrowing and budgeting of the Nigerian government as regards what the CBN, of course, the CBN is trying to do in terms of the ways and means in trying to ensure fiscal discipline when it comes to the borrowing by government, both at the national and sub-nationals. I've been talking to Bunmi Bailey, head of research, SBM Intelligence, and we just, continue with the conversation there. Now, we're talking about government borrowings, and you've actually highlighted the fact that government is indebted to the tune of billions, of course, domestic borrowing, external borrowing, so to speak. Is there a way the private sector can come into play? Is there a role they can play in this, to, in a way, reduce the borrowing pressure on the part of government?
Okay, so for the private sector to come in, you have to give them more or less like incentives for them to strive right now. Remember I earlier talked about the fact that many businesses are actually struggling right now, right? And you have the issue of taxes, which is also hurting their profitability, right? So one aspect that I can look at the private sector can come in is, okay, fine. If they are able to introduce something around, let's say, tax holidays or like tax reduction payments, that's also a form of incentive to actually help to boost business activities for them and also generate revenue. They can actually help to fill that gap. I mean, and by filling that gap, the government can also bring in the case of like something I would call trade by barter. For example, let's say they want to build a they want to do a project or a construction project around areas like Makoko, right? That Makoko areas where there's how that actually pictures the level of poverty in that aspect, right? So what we can do, okay, fine. If you are able to help us in this project, by funding this project, we'll be able to give tax incentives, like maybe reduction in tax, or you not pay tax at all for a period of time. So when you do that, the ability for them to be able to actually generate profit from tax reduction or tax holidays will be able to fund whatever project you want to do. So that's one area they can come in.
Okay, so, but then there's been this argument as regards giving tax incentives and tax holidays with the government having to lose revenue along that line, because of course there's got to be a bit of balance in both. We have a government who is critically looking at revenue mobilization to fund the budget, but then the government will still be losing money if it's going to be giving tax holidays. So is there a way the government can go around this? Because there's an expenditure, there's a budget, there's a performance, that needs to be thoroughly dealt with. How do you think the government can go around that? Don't you think it would affect what it needs to do? Don't you think it will also affect economic development? Because there will be sectors that will be needing these funds.
Yes, but like I earlier pointed out that okay, let's say for example, I pointed out the construction in Makoko. For example, let's say the project they want to use is about, let's say, maybe 50 trillion. I'm just an assumption, right? And there's a shortfall. They do not have that money to be able to finance that project. So okay, fine. If they are able to realize that maybe like 2 or 3 private businesses can actually come to fund that budget, it would actually go a long way in that aspect. So I get what you're saying.
but then does it give, is there a way whereby these private businesses or private companies feel as though they're in an environment where the ease of doing business favors them? Because if you want to have public-private partnership, these private organizations, aside from tax incentives and tax holidays, we want to be in an environment where they know that we don't have market volatility. There is stability in some sense. We have companies that are dealing with the issues around the naira to dollar parity. We have policy somersaults. The government could sleep and wake up and come up with a policy that, you know, could affect businesses, and they'll be like, how do we go around this? So when we don't have that kind of stability and we don't have ease of doing business, do you think it would augur well for these private companies to want to partner with governments?
That is why I said that this is where the government has to play the role here, right? They have to try and improve the ease of doing businesses, right? Because one of the ways of improving ease of doing businesses, I'm going back to what you talked about, the taxing. Yeah. There's one of the ways, right? Because let me go back to the research, the SBM research we did, right? We found out that a lot of businesses, especially small businesses that are actually job creating, that actually create most of the jobs in the economy, we're actually paying multiple taxes. And when you are paying multiple taxes, you're actually affecting the ability for you to generate more revenue. And when you can't generate more revenue, you know what that means. You know, you have to, in order for you to stay afloat, you'd have to cut down jobs, which would automatically lead to more employment. So that aspect, that is one key area that I feel that is actually very important, because once you are able to improve the business environment, you are able to improve the business, the investors' confidence in the economy. I mean, then, I remember then, I think when the FX the FX is still high, right? But in a way, it has been a bit,
both,
you know, stable. We know where it is. Before it was so, the uncertainty in the market was a lot, especially in the beginning of the year when businesses are wanted to plan. So it was a tough time for businesses to plan. So, but right now we have an idea of where the exchange rate is at the moment. So.
Okay, so another aspect I would like to take you on is the issue around borrowing on government and still spendings. Now, this aspect has to do with the ability of these governments, I'm talking about the subnationals now, because we know that there are state governments that have acquired funds, so to speak, and they've expended them in areas where have not been profitable. But then these same governments in these various states do not have an appreciable IGR that can sustain them. So let's look at it, you know, regionally. How do you think that these state governments, whether or not they acquire funds, can be self-sustaining to refund or to pay back their debt obligations, either, you know, locally, domestically, or externally?
I'm sorry, can you...
Okay, so I'm saying for state governments who actually borrow money and expend these funds in certain areas that we've not seen an appreciable, you know, trickling effect in terms of growth within their domain, is affecting their IGR, is affecting their funds. Now, what do you think these state governments can do with the funds they get to improve their IGRs or to improve their fiscal portfolio so that they can pay back on the monies being borrowed? Okay,
so I get you. So it all goes back to improving the environment, right? I mean, if one other sources of getting Nigeria is, I think it's the payee, right? Most for the state governments, right? And the income tax aspect. So if you're able to improve your revenue generating capacity of businesses, they'll be able to pay more taxes. And when you're able to pay more tax, it reduces the ability for the state governments to borrow more, right? I mean, apart from, let's not look at the state aspect. I mean, as at last year, Nigeria's public debt was around, let's say, 95 trillion. That's a huge jump from 46 trillion naira in 2022. So that's why this goes back to what I pointed out by improving the business environment. I mean, if you improve the business environment for businesses, they'll be able to generate more revenue, right, and be more tax revenue for you to be able to execute whatever project that can actually scale development and, in a way, reduce the borrowing appetite.
All right. Well, even as we wrap up on this, of course, you would also want to look at the implementation phase of government. It's okay to have policies. It's okay to have ideas. But we've seen some of these policies in terms of implementation on the part of small-scale businesses. And these business owners coming out to say, most of these policies of government, we've not really seen anything come to us. For instance, the 50,000 naira that the Nigerian government said would be disbursed, you know, to help businesses thrive and get by. A couple of these business owners have come out to say they did not get that sum. there are some policies of government that a couple of those meant to be benefiting directly have come out to say they have not benefited. It has not trickled down to them. So it has not actually made it easy for them to live by or to actually thrive in this economic situation. So when it comes to implementation, it seems as though the government is not getting it right. I don't know if you agree with that postulation.
Okay, so back to yes, we know that we would make noise about, oh, we've channeled these funds to businesses, we're giving incentives, and all, but implementation is the problem. Going back to the 50,000, yet I remember then I saw a story, you know, that talked about different business associations complained that they were not even getting access to this 50,000, even though most of them complained that it was actually small. So what I would advise is, if you are you want to get that amount, you know, to actually get to those businesses, I would actually suggest that, okay, you identify the different business association. I think we have Asborn, we have Smeden, and some other business association. Just identify that, have a meeting with them. Oh, we want to, even if you bring, before you even bring about the 50,000 you want to give to businesses, oh, do you think this amount is actually sustainable right now at this high inflationary environment? Which amount do you think would be okay for them to be able to, you know, cushion the impact of the higher prices that is currently hurting down their businesses and shutting them down? So by that aspect, you'll be able to know. Apart from that, you'll be able to identify those sectors where these businesses need them the most, whether it is food, whether it is clothing, or those that actually are not, you know, actually get enough demand from consumers. So another aspect is also accountability. When you're giving those businesses to the associations, right, you can say, okay, fine, go back in maybe every 3 months, every 6 months, see how the impact of this fund has actually done on those businesses. So that is how we'll be able to ensure implementation phase. And
okay, so with all you've said now, how optimistic are you? What are your projections for the Nigerian economy? Looking at the policies, implementation, those affected by the policies, the playmakers in the industries, the policy makers, and the overall economy. Does it look positive? Because, of course, we have bottlenecks, we have challenges, but does it look positive probably in the next couple of months or years?
Okay, we're already at the fourth quarter of the year. I mean, in the second quarter of the year, we grew by about 3.19% from 2.98%. So usually in the fourth quarter of the year, we usually have GDP growth rate actually improves slightly, right, because of festive season and all. So I would say that I would do a wait and see approach and see what happens. I mean, foreign investments data came out I think yesterday. I saw the numbers and there was a huge spike. Well, I know that most of the investments were from foreign portfolio investors because of the high interest environment. So, but where we would actually see the real impact is FDI. FDI is still a struggle. FDI is where you can actually scale up development, you actually create jobs. So that's an aspect that I'm actually looking at. So that's why I would suggest to just do a wait and see approach and see how the reform that the government has introduced will actually help the economy.
Well, I don't know if Nigerians will be willing to wait and see, because we've actually been waiting and waiting, but then we are all optimistic and hopeful, you know, that these policies of governments will hit the actual yielding curve, and everyone, both people and businesses, will be able to, you know, enjoy the dividends. Thank you so much, Bunmi Bailey, Head of Research, SBM Intelligence. It was nice talking to you.
Thank you so much.